Hi, welcome to Carnegie and our interview with Fingerprint. I got with me Adam Philpott, who's CEO. Hi, Adam.
Hi, Markus. Great to be with you again.
Yeah, good to have you here. Uh, when you released Q2 earnings yesterday, and
Yep.
when we spoke the last time, you just announced the rights issue and the decision
Mhm.
to wind down the mobile business. Maybe
That's right.
starting there, where are you now?
Yeah, I mean, everything progressing according to plan. The rights issue hasn't yet concluded. It's nearing conclusion. There's a slight delay on with the FDI, so some open questions there for one of our partners. So that's still playing out. We expect that to conclude reasonably well soon. And obviously, that then puts in place a really nice strengthened balance sheet, but also a very level playing field for our shareholders, which is something I know that they're very, very keen on. So all moving in the right direction, slight delay, but we'll see that concluded relatively soon. That's on the rights issue side. As it relates to the mobile, also going according to plan. It's winding down well. The business is winding down, and we're transferring that business over to Aegis. Importantly, we've taken the cost out of that business too, and many of those resources have actually transferred to Aegis. So really good from a staff perspective, but very good from a customer perspective. I've used the word graceful wind down quite a lot. Is a credible player in the market. It's really important that we don't flip flop in and out of markets, but when we do make moves like this, which are big for our customers, we do them very gracefully and think about how we continue to serve customers. So feel very good about that. And then finally, there's some assets being transferred and some future collaboration opportunities, particularly with our world-class ASIC team. So some great things going on there, and that partnership moving in very much the right direction.
And looking at the core products, and we'll come back to mobile, but looking at the
Yep,
core products, that group grew by 10%,
yep,
10.5%. And
yep.
that was mainly driven by access. So let's start
Yes.
with access. What was the drive behind access sales?
Yeah, I mean, it's really interesting. If I was to look at one of the bigger needle movers for access, it would be logical access. We're seeing a lot of demand, and I spoke about this on the earnings call yesterday. How passwords are simply out of date. They're difficult to use. They're insecure. They're actually expensive with all the infrastructure you need around them, and therefore people are starting to look at better ways, easier ways, and more secure ways of securing digital interactions, and FIDO and logical access is a key part of that. So we're seeing massive growth there, but we're also seeing growth just across a myriad of smaller segments as well. Electric vehicles, for example, scooters, that kind of thing is something where we're seeing demand. But it's really spread very, very broadly. Lots of smaller deals. We do still get lumpy deals in access as well, which can make it somewhat unpredictable to balance out quarter after quarter. But it's very, very broad based business. And so that's why something I've spoken about, which is beginning to near fruition for us, is how we do even more with our channel partners, because we're a small sales team. So in order to scale, there's a real channel opportunity to reach many different companies. We've got some new products, some new announcements coming out with regards to the channel soon, and that's also very exciting to give us the coverage that we need.
Just to make clear, so the main part of the growth is outside of China. So you historically
Oh,
you've had a big
absolutely.
part of the business in China, but that's not
Yeah.
that's not
No, no,
it.
no. Very much outside of China is where we're seeing that growth, and across those segments. The bulk of the business in China is typically physical access. We've seen a lot more demand outside of China and outside of physical access as it relates to door handles and things like that. So certainly logical access, big area, and then a whole breadth of other areas.
And you use words, I mean, you were talking about it being very broad, it's smaller orders, it's a diverse customer base. Does that increase predictability and visibility, you think?
Yeah, not yet, not yet. I think the way I view it is we do still have these big lumps of business that come in, and we want those, right? We want bigger deals, and so episodically we'll see one of those come in, which skews our results a little bit. Didn't see that this time around. But where we're looking to go, this is where you need a channel, because you need to get those smaller orders up to a certain level for them to fill in the troughs between the peaks of those big orders. I think the channel is a real opportunity to help us with that, but we're certainly moving in that direction, and that's something I'd like us to get to. However, I'll take those big orders anytime I can get them.
Mm-hmm. If we move on to PC, which has been the main driver before, now it was down quarter on quarter, just a bit, but still.
Yep.
And you warned on the call yesterday that this will be volatile. Talk a little bit what's happening in the PC segment.
Yeah, I mean, we are going to see the continued market growth in the share of computers that have fingerprint sensors on them. We're going to see that continue to rise. And again, it's that password piece. Now, of course, you still have a password, and your fingerprint simply unlocks that password. In time, we'll move away from passwords altogether. But we still see that continuing to grow and develop, despite, as I mentioned on the call yesterday, some competition from face. I think there's going to be some skirmishes and some battles, and the manufacturers themselves are figuring out where they want to have both, where they want to go face, where they just want to go finger. So that that I think is still very much an emerging picture, but we definitely see that the fingerprint recognition, fingerprint sensors will remain an important modality in PC because it's so easy to use, so secure, and super cost effective as well. I would say. What else can I tell you? I think, yeah, as you said, we saw a modest decrease quarter on quarter, but we saw really strong growth year on year. Again, just seasonal dynamics. I don't think there's anything more to say there. It's still a positive trend. I'll tell you what else I would say in terms of volatility, though, is we're still quite a new player here. We're still quite a new player in PC, and the development cycles are very, very rigorous and very, very long. It takes time to establish yourself. It takes time to get into new markets. And so a bit like I talked about those kind of smaller deal dynamics, and as we elevate and rise those in access, you could say something similar in PC. It takes time to build momentum and be in enough projects to have a really nice, sustainable curve. And so that's really what we're focused on, is making sure that we're getting into new projects. It's some models end of life. We've got new ones coming off the production line. And that's really where we're spending our time to build that incumbency. But it will take time, and therefore we will see volatility.
Mm-hmm. If we stay just a little bit on the competition from face,
Yes. Yeah,
I mean, you wouldn't say that we are in the fork in a fork in the road. It's not kind of a Betamax VHS kind of moment. It's just it's something else.
No, I would. You're absolutely right. I wouldn't say that. I think, there are two modalities that are available. Which ones the vendors go with, they're playing with. As I said, historically, there's been a lot more face up in the enterprise space and fingerprint down in consumer, but we're really seeing that kind of overlap a little bit with face perhaps coming down into consumer, but also fingerprint as a dual factor on enterprise. Interestingly, we saw iPad launch the new iPad Air, and it's gone back to Touch ID as well. So you can see, this battle's still going on, and figuring out what human preference is, what makes the most economic sense too. The other thing I would say is we have the opportunity to have multiple horses in this race too. So of course we have our iris technology. We're seeing the cost of the hardware necessary to capture an iris signal really coming down now. So I do see personal devices, whether they're PCs or other devices, is a big opportunity. This is longer term for iris, but I actually think iris has got a really strong future in PC and in many other devices that have cameras, because it's less susceptible to deepfake. People are less concerned about the privacy of it as well. And so I see a good opportunity there for iris. Not only that, but iris can be continuous too. You don't keep putting your finger on the same button to authenticate, but iris can be done passively, episodically. And I talked about zero trust can really tie in there too. So some nice opportunities for iris there too in future.
And then finally, maybe quickly, pay. I mean, pay is still small, and it doesn't seem to be moving much. Is this a question of just waiting for it to happen, or do you work on it actively? How should we see it?
Yeah, yeah. I'm not very patient and I don't like waiting. I think for me, our job is to help prove and stimulate this market. Here's what I will say. Momentum is a word I use often when it comes to payment, because that's what we're trying to build, is genuine adoption momentum. But we are still in a build out phase. We're still in a build out phase. There have been some early adopters who are prepared to, take the technology early. We've done 11 launches, for example. What I also look at is indicators of confidence, right? When you're innovating and you're trying to establish new markets, it takes time to do that. I mean, you look at fingerprint sensors themselves, took about 10 years, right? I'm not suggesting payment will take that long, but it takes time. So what you need to look for, if you're not getting revenue indicators, you need to look for other indicators for early adoption. One of the indicators that we follow is investment. We've seen massive historic investment from the ecosystem, far bigger than our investment. These are huge players who are making a massive bet on this, but we continue to see that investment as well. One of the investments we're seeing at the moment is in POS enrollment. So we can enroll in a sleeve today, we can enroll on an app today, but POS is the next area. So that gives us the trifecta of different ways that we can interact to do enrollment of fingerprints. The industry are coming out, or our partners are coming out with prototypes as we speak. Next, we'll move to certification. And I also look at EMVCo. These are the players that are really behind the industry. What we're seeing with EMVCo is really bringing the industry together and standardizing, whether it's on POS enrollment, whether it's on the systems, because that's how you then create real momentum, instead of having small players trying to do it on their own in a proprietary way, to have a more consistent industry level. Even across competitive lines, our partners want to see that, because they know it will create much more mass and momentum, if you like. So I see really encouraging signs. Of course, I want this to take off a lot quicker. We monitor micro signs as well. How much are we engaging with our partners? How many calls are we getting on our software and our technology? And we're seeing all of those things ramp up. Now, when that leads to full mass market adoption, really, really hard, of course, to predict. But that's what we're pushing for, is to make that happen as soon as we can.
Mm-hmm. And then, I mean, we talked about yesterday the zero trust market you called, which is growing in the high teens.
Yeah.
If you look at your current product portfolio and you look at R&D cost, you're cutting cost and you're reducing number of employees. Do you have the product portfolio? Are there avenues that you're still exploring? Talk a little bit about positioning. Do you need to spend more on R&D? Do you have enough, etc.?
Yeah. So let me break that down into two pieces. I'll talk about R&D first, then I'll talk about the zero trust market perhaps second. And so, in R&D, what we spend our time doing is making sure we prioritize where we're going to get the best possible returns. Because of course, we don't have unlimited budget, but we do have sufficient budget for R&D. And a big part of that is because we've exited this huge gravitational force that was pulling us towards it, which was mobile. We freed up a lot of capacity and resource to now focus in those other areas too, right? I think mobile was kind of putting all those other things in the shade and taking all of the oxygen. Now we've got a lot more capacity to go and focus in those core markets. In PC, I talked yesterday about diversifying our supply chain, for example. We've got a number of different innovations going on and a number of new products we're getting into there that all requires R&D. So we've got cost going in there and investment going in there. The same is true. I talked about a channel product that we're launching in Access. We've got investment going in there. On the payment side, we've done a huge amount of investment, so we feel like we're in a really good place. So we're more in maintenance mode, and then we're ready to go to next gen once we start to see additional demand coming in, and then we'll turn the spigots on again to put more cash into that area. So we actually feel good about the R&D envelope that we have. Let's talk a little bit then about the zero trust market. That's not a name I made up or we made up. That's a standard industry term. As we look at that again, I spoke yesterday about how we think about our return on invested capital against our cost of capital, because it's not all build, right? We don't have to build everything. Some things we may choose to build if there's nothing out there that can solve the need. Sometimes there are things that can solve some of the need, and so there may be a buy or a partner. I think partnership is a straightforward opportunity for us, because it allows us to kick the tires on something, make an assessment before we move into a buy phase, because buying something outright can come with its own risks, of course. So I actually think there's different ways that we can explore how we're going to expand. We have sufficient capex and opex to be able to do some build ourselves. There are partnership opportunities. If we were to do something more acquisitive, obviously that would require a slightly different capex opex profile. So that's the way we're thinking about our expansion too. We've got funds to do enough to be dangerous to get an MVP out there, but we will also look at it in other ways too.
Mm-hmm. And on mobile, we touched upon it's going as it should, it's progressing.
Yep.
If you look at the cost reduction,
Yep.
how is that progressing? And if you look at the headcount reduction, is it mainly because mobile, or is it across the board?
Yeah, so they're really pleased with the way the cost reduction is going. Of course, it's. I spoke to all of my staff yesterday, the whole company, after the earnings call yesterday, and it's a really difficult thing to talk to your staff about, that you feel good about cutting headcount, right? No one feels good about that, but as businesses change shape and as you need to address new markets, then of course we need to change our team structure. I do feel good about how we've been able to manage that, because also a lot of those staff, it is mainly mobile. A lot of them have gone over to Aegis in partnerships, so we feel good about that. We've been able to get the cost down, as I said yesterday, 31% cost reduction versus Q1 this year. We've also then been able to reduce our cash burn by 42 mil. So all the right indicators that we need to run as a company. So a lot of that talent is of course related to the mobile business, but not all of it. We're always looking to fine tune where we're investing, where we need more capacity, where we don't need as much as we have in capacity. A couple of areas that we've also done, Markus, is some roles we didn't need full-time roles, so we've moved to fractional roles in some cases. So you still have a headcount, but you're actually reducing your funds by having them half the time, 2/3 of the time, quarter of the time, etc. So that's an interesting area. Other area is taking out some management layers. I'm big on increasing our span of control so that each manager has lots of staff underneath them. So we're not investing too much in managers, but having more people doing the business. So that's really another area that we focused on as part of that cost reduction, to flatten the organization, get back to being more of a startup, more agile, more aggressive out in the market. That's where I'm trying to take the company.
Then finally, maybe looking at yourself, we're going into the fall, and then you go into 2025. Mobile will be out of the business.
Yeah.
Where is your focus in the fall? How much time do you spend on mobile, or very little? And maybe a couple of thoughts going into 2025 when you will be cleaner.
That's a great question. I really like that. I think as you look at the transformation program I've put in place, ignore the kind of 6 pillars that I feel like I've got tattooed on the inside of my eyelids. But as you think about the phases, right, where there's stability, there's accelerate growth, and then there's operational efficiency, right? We're still in that stability. We've been through a lot of change, and actually we're not at a point of pure stability. What I'm building is a platform for the future. By the end of this year, I expect us to be in a place where we now have that foundation for the future of the company. So I think about the transition from this year to next year as really a springboard to get into those new areas we're going into, to focus on our core business and make sure we're driving really strong growth there as well. That's how I think about this year. Get to the end of the year, have a solid foundation, be at a place where you're really getting to stability, and then springboard off that into next year to start to build in place the pipeline you need to accelerate growth. And we then move into that accelerate growth phase.
Sounds like there's a lot more to come, but we'll speak soon again. Thank you very much for coming to talk to us.
My pleasure. Great to catch up with you, Markus.
Thank you.